Welcome back. So today I'm with Jessica Adamson with Movement Mortgage here in town. So we'll talk a little bit about Movement, kind of their whole thing, but also this video is going to be really going deep into the mortgage world because we've got a lot of comments on my YouTube channel recently just about kind of the lending process and really what that looks like more in depth. So I thought, better yet, let me get with a lender like Jessica who does it every day, only lending, and they can really go deep into all things lending.
Absolutely.
So if you're new to the channel, we share all things real estate content, living in Tulsa content. So be sure and like and subscribe for more, and we'll get into the content right after this. So lending, right? You want to buy a house, you've been thinking about it, you're kind of not sure where to start. Well, the best place to start is talking with the lender. I always say that a lot because lenders can give you a wealth of information, and even if you're not approved then, a lender will be able to tell you what you need to do to get approved. And sometimes it can be in less time than you think, but you may actually be approved and not even realize that you can actually buy a house. Because Jessica can attest to this, there are so many more programs and options available today that weren't even available like 10 years ago. So we're going to be following the mortgage roadmap here. And the first thing is really that initial conversation. So Jessica, what can people expect? They call you or really any lender. What are lenders looking for in that initial conversation?
Absolutely, Ryan. Well, I'm happy to be here with you and excited to kind of share the upfront process of the piece because I feel like that's missing a lot. With that initial conversation, we are going to get on the phone. I'm going to ask you if you know what your credit score is, if you know what your income looks like. Is it W-2? Is it salary? Are you 1099? Are you paid by the job? Are you paid by the mileage? Because everybody's jobs are different and how they're paid.
Everyone's income sources are vastly different.
Exactly. And so once I get kind of an idea of what I'm looking at, I send you to the application. Obviously, I ask you that question up front. Hey, is it okay for me to send you over a link to the mortgage application that you'll see right here? And it's super easy to fill out. The best thing to do is complete it when you have time. There's no rush. Don't rush through it because everything has to be as accurate as you possibly can get with it. It's going to ask you last 2 years of your residence, like where have you lived? It's going to ask you for your bank accounts. Where do you bank at? It's going to ask you for pay stubs and how much you make and basically everything but your firstborn child. So at the end of it, once you're completed with the mortgage loan application, that's when it'll ask you, hey, can you please upload these documents just so we can verify everything that you've put on the application is correct. So after that, it kind of goes into my hands from there. And so usually 24 hours after you've uploaded all of the documents, I then go through all kinds of different loan application options, basically. Down payment assistance programs. Is a FHA better than a conventional for you? Is USDA 100% financing good for you? Just kind of depends on the situation and what you're looking for.
Yeah, I think that's a key point because there's so many different options, like we said a second ago, that really you got to find a lender like Jessica that's going to really look at the whole roadmap down the road and what's the best option for you. Because any lender can go like, well, yeah, we'll just run you through for an FHA. Was an FHA actually the best product for you in your situation and what your real estate goals are? So you need someone like Jessica that can kind of give you the breakdown for each one that can make sure that you're making the best decision for yourself and the loan that you're about to commit to for the next 15, 30 years.
Absolutely. I'll add in there that you want to make sure that you're talking to a lender that not only looks at your credit and sees what they can do to improve that score. You want to talk to a lender that also gives you more than just one option because you probably qualify for more. And make sure when you're talking to that lender, hey, if I'm planning on switching jobs, that's going to change your pre-approval. Or if you're planning on buying a new car because your car is breaking down, that's something that the lender needs to know.
Definitely. And we'll circle back to that as we move in because things to not do once you're approved and you're out shopping is a very important thing to touch on in the lending world.
Absolutely.
So what's our next one on the list here?
Our next one is upfront underwriting. So once I gather all your documentation and I put you in a certain loan program, so say if it's FHA or conventional or whatnot, I'm going to gather all these docs. I'm going to then submit it over to our underwriters. We do what.
But wait, Jessica, what's an underwriter?
An underwriter is kind of like the god of mortgage.
Exactly. They really are.
Let's just say that because they're there to really approve or deny the loan.
Right.
And so since I do this up front, we're already verifying your income, your credit, and your assets, which is awesome because then once you're making offers on a home, you're pre-approved. You're actually
pre-approved. So a lot of people will go, they start thinking of it, they go online and they do a quick online mortgage application for some random, like Rocket Mortgage or something like that. They're popular, right? But what those companies don't do is they're just basing your pre-qualification based on the information you typed in. They didn't actually look at your bank statements or anything like that. So if any of those things are not exactly what you typed in, you could potentially not be approved anymore. And that's really bad because if you were out already in contract for a house and then your financing falls through, you could potentially lose the house that you just fell in love with. So that's why with Jessica's way of doing the automated underwriting and getting all that stuff up front, once Movement Mortgage and Jessica says that you're approved, you're approved. So
time out.
What?
Sorry. There is a difference between automated underwriting and actual underwritten.
True. Let's dive into that.
I wanted to really touch base on that. So automated underwriting is just me clicking a button and it going through an automated system to check your income and your assets, but doesn't actually look at those bank statements or it doesn't actually look at those pay stubs.
Right. It's based on the stuff that you typed in.
Exactly.
Yeah.
So an actual underwriter is going to dive real deep into those documents and really check it out and see what's what.
Right.
So
yeah.
That. Sorry.
But that's where it goes back into like the underwriters are the gods. They decide based on all this stuff, yes, they're approved, or they may say, well, we actually need this, or you need to prove that. And that's where sometimes in the lending process, I know sometimes clients get a little bit like, she keeps asking me for this, and they're asking me for this, but I already gave them all this. It's because the underwriter is coming back and saying, well, actually, I need one more of these, or we need to prove where that income came from, that kind of thing, right?
Or if you submit a bank statement that maybe we haven't seen before when you first initially updated the application, and we haven't seen that bank statement before, and we notice that there's Cash App or Zelle or different things going on in that bank statement. Of course, the underwriter can go back and be like, hey, what are they doing here?
Yeah. And the thing to remember with all this, though it can seem monotonous when you're getting your loan, remember that it's all in order to protect you and make sure that you can actually afford this loan. Because, remember, I've done a lot of videos on the market crash and all of that. A lot of that was just bad lending practices because we don't have the safeguards in place that we have today. So if you're getting approved for a loan, there are so many hoops that the lender needs to jump through to make sure that you can actually afford that payment and you're not going to get foreclosed on.
Absolutely.
And so it's all in an effort to protect you. So if your lender is asking for a lot of documents, just know they're not just being facetious. Like they really are trying to help you and make sure that your loan is 100% ready to go and you're going to have a great lending experience.
So just so we're clear, the first steps to seeing if you can buy a home is 1, talk to a lender, and then 2, update the application. Make sure you do the application with your lender. Ask them all those questions. They're going to have a hard pull on your credit. And then 3, once you have a pre-approval in your hand, then you can go talk to Ryan and then you guys can go shopping for the home.
Exactly. So if you've seen all those videos on the home buying process, you can go back and watch those. I want to stay on the lending though. So after you're with me, obviously we're shopping, we find the house and I've submitted an offer and then it's going to be back in Jessica's court to do the things that need to happen while you're in contract. So what does that look like?
So that looks like I get a copy of the contract. I am reaching out to both sides of the real estate agents. I am reaching out to the buyer, which would probably be you, and then talking to the title company just so we're all on the same page. Hey, this is the house that we're trying to buy. Hey, this is what our loan amount's going to be. Hey, this is what type of loan we have if it's a FHA or conventional loan. And then what we do is we take the contract now and we submit it up to the underwriters for like a conditional approval, basically, because at that time we should only be waiting on appraisal and title work.
That's where a lot of the prep work is so important in lending. So if you're thinking about buying a house in 3 to 6 months, it's okay to talk to the lender now because you can start getting a lot of that paperwork together. Because what I find a lot is people that, they tend to want to wait till like the last minute. That's not going to be the best option for you because you're going to be stressed. It's going to be a hard transaction because you're going to be scrambling to get stuff together. But approvals are good for like how long?
Well, honestly, approvals are good for 90 days, quote unquote, right? So if your income has changed, then that could change your pre-approval. If your credit has changed, that could change your pre-approval. So it just kind of depends. So if you're thinking about buying a house within 3 to 6 months, talk to a lender because we can help you increase your credit score, which is going to be very important for the interest rate, right? We always want to make sure like we're on a good standing, good path to when we are actually in contract that we're ready to go and we're not going to run into any issues.
Moving on, the next thing obviously is going to be the appraisal. So I've done videos on appraisals, but just briefly you can explain that, Jessica, from in lending terms.
Yeah, absolutely. So the best thing to think about for the appraisal is he is going to give us the actual value of the house, right?
Yeah.
And so your inspector, people get these things confused all the time. You're like, oh, we have inspections. Oh, wait, is the appraisal part of the inspection or is it like not? Like what's going on there? Okay, so appraisal is the value of the house. And this is the value that we're going to get. And we're going to use this value to proceed with the loan. I order the appraisal after inspections are completed because we want to make sure like, hey, we've already negotiated all these repairs, blah, blah, blah. And I want to go ahead and order the appraisal so we can get the value and then we can get the title work and then we can close. So that's basically it in a nutshell. Yeah.
So your appraisal, of course, if you're getting a loan, you have to get one because not only does it make sure that the lender is lending on a property that's actually worth what you're paying for it, but also protects you because then you're not overpaying for the house. And you're also not contracted in. Like if the house doesn't appraise for what you offered, you're not obligated to buy that house. So it's like a win-win all around.
Ooh, can we talk about that a little bit maybe?
Sure.
Let's talk about if the appraised value comes back low. Okay, so say you have a contract for $200,000 on a home, and we decide that, or the appraiser decides that the house is worth $195,000. What do you do at that time? Oh gosh, now what? So our appraisal review team takes about, I say 12 to 24 hours to review the actual appraisal. I'm sorry. And then it will go to our underwriters, and then it comes back to me. And so that's our value, right? Okay. So we have $195,000. Now I call Ryan and I'm like, hey, Ryan, we got a situation going on here. Hey, so can you lower that price? That's when Ryan will go back into negotiations with the seller and kind of see like if we can come down a little bit or what we need to do in that instance.
Right.
Also, I want to touch base about like repairs on the appraisal itself. So what happens if the appraiser is requesting a new roof?
Yeah, it's a big one.
So that's when Brian comes in again and says, hey, Mr. Seller, we need to negotiate. Who's going to pay for this roof? Are you going to do an insurance claim? Are you going to just pay for it out of pocket? Are you going to have the buyers pay for it?
Right.
What's the situation there? So another time to renegotiate the contract and kind of see exactly where you're wanting to go.
So that's all of these things. Remember, they're all in place to help you make sure you're getting a good product. You're not getting your inspections are there to make sure you're not buying a money pit. The appraiser's there to make sure you're not overpaying. I'm there to help you through the contract. And the lender is such an important piece in that puzzle to make sure everything's getting done the way it should be. Because again, this is something you're committing to the next 15 to 30 years. So you want to make sure your loan is done correctly.
Yeah, absolutely. We have time frames too. So it's very important when a lender reaches out and says, hey, so-and-so, I need these documents from you. You need to get back to us real quick so we can keep the ball rolling.
Got to keep the ball rolling. Because remember, especially in contract on my side of things, I'm trying to keep you within your time frames because typically in Oklahoma, it's going to be about a 30 to 45 day contract. So the lender needs to get all of their stuff done. We have to get all the inspections done. Title has to get all their stuff done so you can close on time. Because if you don't, and I drop the ball somewhere along the way, you could potentially lose out or be losing money. You could lose the contract, you could lose the house, you could lose your earnest money. So our job is to make sure you're staying within those time frames. So remember, if the lender or I are asking you for something that we need to complete your file, there are time deadlines behind that, and we're trying to keep you from being in hot water.
Right. If we keep poking you and bugging you, there's a reason.
There's a reason.
I promise. Like, we're not trying to be bad people. I really promise. We're just trying to keep with the timeline.
Definitely. So homeowners insurance, let's talk about that a little bit, because that's something that's kind of another portion of the lending side. So take it away, Jessica.
Absolutely. So you can actually increase your deductible to lower your premium, because we're trying to meet our debt to income ratios, and you can change it like after closing, and then it doesn't affect anything. So if you're like, ooh, I really want this certain coverage on this house, but the premium is like way too high for our debt to income ratio, change it after we close.
There you go.
And that'll solve all the problems.
Lending secrets right here, you guys.
So when you're first in contract, you will get a loan estimate is what it's called. And it's usually 3 to 4 pages long. Kind of tells you the breakdown of your loan amount, your interest rate, if it's locked or not, all of those good things. You could get multiple loan estimates throughout the process until we get a closing disclosure. Now, your closing disclosure should be your final numbers, right? And so our final numbers means our title company has balanced, and then our closing team has balanced with the numbers. It's going to check and see what taxes the seller has already paid for you, so you're not liable for the whole past year, right?
Everything gets prorated at closing. So like HOA fees, trash services, if you're in a fire district and you're paying any miscellaneous fees that are like a yearly due or whatever, that all gets prorated. And then, so you're not paying for the time you weren't living there, obviously. But then the lenders and the title companies are working together to balance all of that, meaning every penny, every cent needs to be accounted for before you can close.
Absolutely.
So obviously everyone's concerned about interest rates, right? So rate locks come into play. If you've heard of them, maybe you haven't, we're going to discuss it right now. So what's a rate lock, Jessica?
So locking in your interest rate, we are talking about, okay, so Mr. Lender, I'm calling you to see what the rates are today. That's not really valid because rates change every day. And honestly, you're going to get a different rate than you did yesterday, than today, than tomorrow. It's going to be different.
Exactly.
But there is a lock and shop option. You can do that. It usually costs a little bit extra up front. I don't necessarily, if you're worried about the rate changing dramatically, then absolutely go for it. That's a good option for you. However, if you're already like running fast because your lease is coming due real quick and we need to get into this new house as soon as possible, we probably need to wait to lock the rate until we're in contract and we have a property address. Usually we can't lock the loan until we have a property address anyways. So at that time, that's when we actually lock in the rate. You'll get a new loan estimate saying the rate is actually locked.
There you go. Simple as that. So all your hard work has paid off. Your appraisals come back. We're just going to assume it came in for the right value. Your loan's been through underwriting. So the last thing is that clear to close. So what does that look like, Jessica?
It looks like an email coming through saying clear to close.
Exactly.
I mean, there's confetti and champagne flying everywhere. I'm just kidding. But you're clear to close means you are actually clear to close.
Yeah. And then like right before closing, don't they do like another check on like credit to make sure everything's still the same?
They do a soft pull on your credit just to kind of make sure like you didn't go buy a boat without us knowing. But honestly, I will tell you there's little tickers in your credit. So since we've pulled credit and say you go and apply for a loan, we get that notification that you applied for a loan. So please don't do that.
Yeah. And that goes back to what I was saying earlier when I said we were going to circle back to this. So this is one of the most important things that will kill your deal and make the lender angry, make the real estate agent angry, and you'll be sad because you could potentially lose your house.
I mean, I won't be angry.
I'll be angry. I'll feel bad for you.
Yeah. It would
so
be bad.
when you're in contract, remember when the lender approved you, that was based on all of your current credit, income, all that stuff. So if something drastic changes, like you finance a car or you go and finance a bunch of furniture for the new house, or you apply for a new credit card at, Sears or whatever, that could potentially unapprove you because stuff changed. And you could maybe still get pre-approved, but you might be delaying the process because the lender's going to have to go back in and basically redo the loan with the new information, and that can kill your deal in a heartbeat. So what you want to do, all those things are fine after you close. So in Oklahoma, you get the keys that day, everything's done, go buy all you want. But before then, until you actually have the keys in your hand and everything is finalized, do not finance anything, make any big purchases that would drastically change your credit score or your income.
You're right.
And don't change jobs either.
Please don't do that.
People do that all the time.
Please don't go from like a W-2 to a 1099.
Yeah.
That's
just
real
wait.
bad.
Ask the new employer, hey, can we wait till like this date? I'm buying a house right now. You know.
Then change it. Once we get that clear to close, guys, run.
Nobody cares after that.
I don't
If
care.
your file is closed, your finance, all that stuff, you're going to start getting your payments.
Yeah.
Nobody cares. At that point, as long as you're making your payments, everybody's happy. But up until that point, there cannot be any major changes from the time you got approved to the time you bought the house. It could be a problem.
Yeah.
But that's pretty much it. Thanks for joining us today. Thanks, Jessica, for doing this with me. Hope you found it helpful. Of course, like and subscribe for more information. And if there's more lending questions that you have, of course, drop them in the comments, because that's always more videos we can make, or just answer those questions for you if they're quick one-off answers. Hope you guys share this with a friend if you think they might find it helpful. I mean, I think people are always in kind of that lending mode, especially if you've never bought a house before. You're just curious. And you're never going to know unless you pick up the phone and call, because there's a lot of information out there on the internet, and it's best just to get your information right from the source. So who's better than call the lender? So I hope you guys have a great day, and we'll see you in the next video.